Hive has just received its very first corporate credit rating since it was founded. So let's talk about this. Now, a credit rating is essentially a score given by independent agencies that evaluate how financially healthy and stable a company is and how likely it is to pay back its debts. So big institutional investors, banks, and business partners use these ratings to decide whether to invest in or lend to a company. Now, Korea Ratings, KR, which is one of South Korea's major credit rating agencies, gave Hive an A+ rating with a stable outlook. So this means that Hive is viewed as financially strong, unlikely to default, and expected to maintain this stability for the foreseeable future. So it's not the very top rating, but it places Hive in a high quality tier with where raising funds through bonds or loans becomes easier and cheaper. So yesterday, a lot of Korean media articles were written about this. So let's briefly read through that, and then I will actually look at the original document released by Korean Ratings to look more into details. Okay, so here's an article. Hive earns first credit rating of A+, September 10th. For the first time since its founding, Hive has been assigned a corporate credit rating, officially recognized for its financial health and growth capacity. Korea Ratings gave Hive an A+ rating, citing excellent business stability and very strong financial stability. Korea Rating, also known as KR, 한국기업평가, highlighted Hive's top-tier market position and the powerful brand influence of its artists as key strengths. The agency noted that Hive's rapid expansion and diversification through its multi-label system, as well as revenue growth from indirect participation models like the Weverse platform, have enhanced its stability. On the financial side, KR pointed to Hive's strong operating cash generation and effectively debt-free structure as indicators of very high stability. With a diversified artist portfolio and expanding sales, Hive continues its growth trajectory while maintaining solid profitability. The agency further reported that Hive holds about 1.6 trillion Korean won in cash and cash equivalents, and around 360 billion Korean won in net cash, ensuring sufficient capacity to cover short-term borrowings. Key financial metrics were also cited: a debt ratio of 61% and a borrowing dependency of 22%, both reflecting strong liquidity management. A Hive representative commented, "This A+ rating is external recognition of our financial stability and growth potential. The credit evaluation was carried out as a preparatory measure to support our mid to long-term management strategy. We will continue working to build long-term trust and pursue sustainable growth." Okay, so as a fan of Hive artist and as a shareholder, this is a notable news, and it got me interested in looking into more details. So I did. And for context, so here's a chart from Korea Ratings, 한국기업평가, who provided the A+ rating for Hive that explains how corporate credit ratings are structured. And it shows that long-term ratings measure a company's ability to repay debt over an extended period, while short-term ratings focus on near-term obligations. And the rating scales run from AAA, AAA, which is the highest possible grade, indicating virtually no risk of default, down through like AA, AA, A, BBB, which still reflect like investment grade stability, to BB, B, and then there are also like CCC and C, which indicate progressively higher levels of speculative risk. And then there's also a D, which signals a company that is already in default. And the addition of plus or minus signs allows for finer distinctions within each category, such as A+, which is the grade that Hive got, or A or A minus. So in this system, Hive's newly received rating of A plus, which means stable, means it is considered to have strong credit quality with low default risk, placing it at the upper end of the A category, just below the very strong AA level. And the stable outlook indicates that the agency, Korea Rating, KR, expects Hive to maintain this level of financial strength in the medium term without significant improvement or decline. So in practical terms, this rating shows that Hive is financially healthy and reliable in meeting its obligations, and pretty much well positioned to borrow or raise funds on favorable terms. Okay, now for those of you who are interested, you can stay in this video with me while I look at the full report that this agency released yesterday. So it's 20-page report looking into details of Hive's business, including like IP business, music business, artists, and it talks about all sorts of things. But so far, I have already covered the summary, but you're welcome to stay and look at the details with me. Okay, so if you go to the 한국기업평가 website, Korea Ratings, you can actually download this report, which I did because when I look at issues and news, I always prefer going directly to the original sources. Okay, so let me go through each one of them, each section. So here's a full report. It starts with rating rationale. Okay, so it says about Hive: excellent business stability supported by top-tier market position and strong brand influence of artists. So they are explaining why they provided A+ ratings. And this is a summary version with 4 bullet points. Okay, so the first one was what? Excellent business stability supported by top-tier market position and strong brand influence of artists. Second, very strong financial stability backed by robust operating cash flow and an effectively debt-free structure. Third, profitability expected to gradually improve with the resumption of activities by flagship artists. And by that, they are referring to BTS. Fourth, while surplus cash reserves remain sufficient, the impact of investment policy on the financial structure needs to be monitored. So let's see what that means. Okay. Next, they describe the company overview. Established in 2005, the company is the #1 entertainment firm in Korea. There you go. And why did it say established in 2005? Because Hive was originally Big Hit, right? That was established in 2005. And it operates across album production and publishing, artist management, and platform businesses. It's listed directly on the Kospi in Korean stock market in October 2020 and renamed Hive in March 2021. There you go, it says. As of June 2025, it holds 83 subsidiaries, including Big Hit Music and Playlist Entertainment. And as of June 2025, Chairman Bang Seong is the largest shareholder with a 31.6% stake in the company listed shares. Now, second page, new rating rationale. Hive has been assigned a corporate credit rating of A+, stable, 안정적. The main grounds for the rating are as follows. First, strong business stability with top-tier market position and strong brand power of artists. Hive is Korea's leading entertainment company. Despite its shorter operating history compared to other domestic competitors, the company achieved rapid growth by building a multi-label system through aggressive acquisitions and label launches at home and abroad, alongside the global success of its flagship artist, BTS. Shout out to BTS and ARMY. Hive significantly outpaces its domestic rivals in terms of revenue scale, with album market share exceeding the mid-30% range, securing a dominant market position. In addition to BTS, groups like 17 also enjoy very strong brand recognition and influence. further consolidating Hive's top-tier status in the Korean entertainment industry. While music management businesses inherently face volatility due to the short life cycle of idol groups and risk tied to reputation and image, Hive has mitigated this by diversifying its artist portfolio under the multi-label system. Even during BTS military service hiatus between 2023 and 2024, Hive continued to expand in scale, reducing its dependence on any single artist. The company has also broadened its revenue base through indirect participation models such as the Weverse platform, supporting an overall judgment that business stability remains excellent. Second, very strong financial stability thanks to strong cash generation and effectively debt-free structure. Although costs have risen due to workforce expansion and higher amortization charges tied to intangible assets from label acquisitions and increased outsourcing costs from higher quality album and concert production, Hive's absolute profit generating capacity remains solid. In 2024, profitability weakened as growth slowed. BTS was inactive as a group, and new artist development costs weighed on results, but revenue continued to expand thanks to portfolio diversification. Despite spending on acquisitions such as Ithaca Holdings, which 1.1 trillion Korean won in 2021, and Belief Lab, which was acquired for 150 billion Korean won in 2023, Hive has maintained an effectively debt-free structure through IPO proceeds, equity financing, and internally generated free cash flow. In May 2025, the company also sold its entire 9.4% stake in SM Entertainment for 243.3 billion Korean won, which I have covered on my channel. This underpins a very strong level of financial stability. 3. Profitability expected to improve as flagship artists resume activities. All BTS members completed their military service by June 2025, with new album releases and a world tour scheduled for the first half of 2026. Which should drive growth and profitability in the music segment. The Weverse platform is also expected to see increases in monthly active users, aka MAU, and average revenue per paying user, aka ARPPU, narrowing operating losses. New groups such as TWS, TWS, who debuted after 2024, are performing well, and in August 2025, Big Hit Music launched its first new boy group in 6 years, further strengthening Hive's portfolio. Shout out to Cortez, who has been killing it. Although rising content production costs and upfront expenses tied to launching new artists will remain, profitability is expected to gradually improve as economies of scale ease fixed cost burdens. Yeah, as a shareholder, I have a lot to say about this one, but for now, let's move on. Next page, page number 3. Fourth, need to monitor the impact of investment policy on financial structure. Interesting. Let's check this out. Hive began paying dividends starting with its 2023 results, but given its strong operating cash generation, it is expected to retain sufficient free cash flow, FCF, in the near term, even while covering working capital needs and recurring investments. With the SM stake sale, Hive now holds 1.6 trillion Korean won in cash and equivalents as of June 2025, and compared to the past, has adopted a more conservative investment stance, limiting the risk of sudden financial strain from equity investments. Yeah, because a couple of years ago, Hive was like acquiring like crazy, but nowadays they're going a bit more conservative, although they are still investing a lot in new projects and new artist developments, right? Nevertheless, ongoing incentives to diversify the artist portfolio, expand overseas, and create new revenue streams from artist IP, for example, games and other spin-offs, mean that a large-scale M&A could reintroduce financial pressures. For this reason, Korea Ratings will continue monitoring HYBE's investment scale and its effects on the company's financial structure. Yeah, let me say something real quick. I have nothing against against investing in potential areas of growth like new technologies, but I think Hive has to be wise in choosing the right areas. For example, they several years ago, they started investing in blockchain, or what was it, the name of the business. Anyways, it wasn't really successful, and they kind of scrapped the project, like the NFT project. Was it like levels? Yeah, I think the name was Levels. So something like that. If something is hot, just because some new technologies are hot doesn't mean that Hive has to invest in it. You know what I'm saying? So I hope that the management becomes wise while deciding what to invest in. And then, of course, they have to focus on their core businesses, music, IP, and artist. And I think they realize that is indeed their core business that they should put the most focus on through their HYBE 2.0 strategy that they released and talked about last year. So yeah, I think they're doing well. All right, for now, let's move on. Potential rating change factors. In 2024, despite BTS being on hiatus, Hive maintained revenue growth through its diversified portfolio, though operating margins fell due to cost from new artist development. With BTS' full return and an expanded artist portfolio, business performance is expected to improve gradually from 2026 onward. Provided Hive continues to cover most recurring expenditures and equity investment costs with internally generated cash, and avoids excessive large-scale acquisitions, it is expected to maintain its effectively debt-free status through 2025 and 2026. However, potential impairment charges from acquired labels and their impact on net profit will be monitored as possible rating risk. Yeah, so overall, Hive is financially stable and healthy. Shout out to those people who tried to make it seem like Hive is running out of cash and about to fall apart, last year with convertible bonds issue. Yeah, and then K Media did their part. It tried to portray Hive as like broke company or about to go broke, but in reality, they got tons of cash. All right, so that's like the summary version of this full report, but then they go deeper. Okay, so I'm gonna keep moving forward. Page 4. Detailed rating rationale. Business factors. Sip of water. Top tier market position and strong business stability in the domestic entertainment industry. All right, let's check this out. Hive operates under a multi-label system established through numerous acquisitions and the creation of new domestic and international labels. This structure has enabled the company to grow faster than its peers and expand its artist portfolio. The multi-label system refers to a structure in which one entertainment company oversees and supports several independent music labels, providing them with infrastructure and resources at the group level. Hive's main business segments are divided into music, which is artist training and music content production, plus related entertainment industries such as concerts and video content. And number 2, platform, providing content-based services through its proprietary fan platform, that is Weverse. And 3, tech-based future growth, research and development of next-generation entertainment such as games and other artist IP-driven businesses. Yeah, games. Hive is continuing to invest in that area. Now, major labels and artists as of June 2025. So they listed BTS, TXT, and Cortez for big hits. 17 and Tuas for Playlist, Le Seraphim for Source Music, Zico and Boy Next Door for KOZ Entertainment, ENHYPEN Islet for the Belief Lab, NewJeans for Adore, and Lil Baby, Lil Yachty, Mike Migos, City Girls for QC Media Holdings. For those of you who are fans of other artists and groups, yeah, my condolences for them not listing the artist. But I said this during the earnings season when Hive live streamed their earnings presentations. They got tons of artists and groups. So if they list every one of them, it might be like too packed. Although I wonder why they didn't list YX labels, Hive Japan's. In fact, they didn't even list Cat's Eye. Interesting. All right, let's move on. We gotta ask 한국 기업 평가, Korea ratings for that, but oh well. All right, let's go back. Let's see. Strongest market position in Korea. Album sales in Korea highlight the strength of Hive's fandom loyalty, while the dominance of the traditional big three agencies. Here's it, the charts that they included. So while the dominance of the traditional big three agencies, SM, YG, JYP, has weakened, Hive's market shares has reached unrivaled levels. Hive's market share, where is it? Between 2022 and 2024, Hive's average share of the domestic album market exceeded the mid 30% range. Fantastic. Okay, now next page. Page 5. Strong brand power of artists with global recognition. BTS remains the most globally recognized K-pop artist, maintaining strong influence even during members' military service. Beyond BTS, artists such as 17, Tomorrow by Together, and ENHYPEN also enjoy recognition both domestically and internationally. Selected artist milestones, and then I'm not going to read all of them, but they listed BTS, 17, Tomorrow by Together, and ENHYPEN as the most notable examples. And yeah, they are the biggest four groups, and note that they are all boy groups. I wonder, perhaps in the near future, maybe in the next couple years, girl groups like Le Seraphim or Cat's Eye might be included as well. We'll have to see. Perhaps Islet too. Yeah, we'll have to see. All right, superior portfolio diversification compared to peers. Hive's continuous acquisitions of well-known domestic and global labels allow it to secure a wider range of genres and artists compared to rivals. Its shorter debut cycle for new groups also helps expand the artist portfolio and strengthen market share more effectively. Oh, by the way, quick correction, not correction, but they said Dynamite music video exceeded 1.9 billion views as of December 2024, but we now know that it has now exceeded 2 billion views. So shout out to ARMYs and BTS. Okay, moving on. Let's see. 2022 debuts. Le Seraphim, NewJeans, N-Team versus JYP and Mix. Okay. So 2023, Hive debuted Boy Next Door, and SM Entertainment debuted Rise. In 2024, Hive debuted 3 teams, that is Tuas, Islet, and Cat's Eye. Meanwhile, SM debuted 1 group, NCT Wish, JYP 2 groups, Vicha and Next Z. By the way, Vicha changed their name to what was it? Girls Era or something? JYP Vicha. Girl Set. Yeah, Girl Set. That's what it was. YG debuted 1 team, Baby Monster, in 2004. And then here's a chart. Not this one. Comparing the revenue of his peers. All right, next page 6. Hive growth despite BTS military hiatus. Hive divides revenue into 1. Direct participation, albums, digital music, concerts, endorsements, and appearance fees. 2. Indirect participation, merchandise, content, and fan clubs. After the pandemic, direct participation revenue rebounded, shifting from 47-53 ratio in 2020 to 64-36 ratio in 2024. 2022, revenue rose 41.4% year-on-year, boosted by concert resumption and strong releases by Le Sserafim and NewJeans. Concert revenue increased more than 5 times as shows jumped from 8 in 2021 to 78 in 2022. In 2023, even as BTS members began enlistment, revenue still rose 22.6% year-on-year, with solo activities by members and strong performance from 17 and TXT offsetting impact. In 2024, despite no full group BTS activities and declining album sales due to fan-based competition and China's slowdown, revenue still inched up thanks to more concerts and growth in MD. First half of 2025, revenue rose 20.5% year-on-year. Album sales fell 7.5% due to continued BTS hiatus and fewer NewJeans releases, but concert and MD-driven revenue growth more than compensated. Concerts expanded to 140 in the first half of 2025 from 90 in the same period of 2024. Interesting. Moving on to the next page. Diversifying by region while easing dependence on BTS through a broader artist mix. Sales have expanded from a Korea-centric base to all global regions. The share from Asia outside of Korea, like Japan, China, Southeast Asia, etc., keeps rising. Thanks to strong fandom in Asia for BTS, 17, and other artists, Asia's sales share exceeded Korea's in 2024. Along with BTS global reach, overseas label acquisitions and footholds help keep sales in North America and other regions, including Europe, at a steady level. Lower reliance on BTS, the flagship act. BTS once accounted for around 90% of sales in 2020, but that share has steadily declined as other artists have grown. In 2024, during BTS military hiatus, 17's sales share temporarily surpassed BTS. Ongoing label acquisitions and the multi-label system enable faster debuts of new artists, helping reduce dependence on any single act. And that's a good thing, because if it's relying on a single artist, then that single artist or group feels too much pressure, and they might be too stressed or might be overworking, and over the long term, that's not a good thing. So I think diversification in this context is pretty good. Trend in sales mix by region. Since 2022, online sales have been allocated to Korea, Asia, North America, other by region. And then page 8. Let's see. Where is it? Yeah. Diversifying earnings and expanding IP through the platform and tech-based future growth segments. Interesting. The platform segment, operating the Weverse fandom platform, amplifies music segment revenue. Weverse is a fandom platform that bundles key services for fan life artist communications. Key services for fan life, like artist communications, concert viewing, merchandise purchases, and more. As a highly influential platform in the global fandom market, Weverse functions as a core channel for album, fan club, and MD sales, helping maximize music revenue. Initially centered on in-house artists, Weverse broadened after 2023 to include outside artists and actors. By 2024, a total of 171 teams were onboarded, and now is expanding even further, and they are now recruiting global artists as well. As of end of June 2025, total registered users worldwide were 54.35 million, with average monthly active users of 10.86 million. In 2024, total payment volume through Weverse exceeded 600 billion Korean won. Wow. However, the platform segment itself continues to post operating losses. Man, profitability remains weak as service expansion since 2023 required staff additions that lifted personal expenses. Okay. For onboarding external artists, private messaging, and subscription services. So indeed, analysts and investors alike are really looking forward to the day when Weverse really starts to post profits, like real profits, And I think Weverse as a platform's got tons of potential and room for growth, Now, the tech-based future growth segment is pursuing R&D to turn artist IP into businesses such as AI and games, but revenue and profit contributions are still minimal. Yeah, so here is an example of an area that HYBE is investing and still not returning like visible outcomes. And that's what usually R&D is about. In the short term, you don't have any visible outcomes that you can show off. But the hope is that, expectation is that one day over the long term, it can produce, tons of results and allow your investment to pay off in the future. So we'll have to see. All right, page 9. Financial factors. The boring part, I guess. Cost structure is mostly variable, but the fixed cost share is rising. The ratio of fixed type cost, such as personnel expenses, to sales is trending up. The ratio of fixed type costs like personnel and depreciation, amortization rose from 14.7% in 2020 to 21% in 2024. Headcount grew with business expansion. Total employees from 382 at the end of 2020 to 783 at the end of June 2025. Yeah, Hive is employing a lot of people, which is one of the reasons why Hive was named as a great place to work by the South Korean government. And they're the only company listed as a large corporation in Korea, 대기업, among the Kpop industry, entertainment industry. Let's see. Amortization tied to intangible assets from subsidiary acquisitions increased. Let's see. Used right asset amortization also rose with the lease of new Yongsan headquarters. Even so, variable costs still account for a large share of total cost. Inventory movements arise because the company directly holds stock of albums and MD products, which drive core sales. Outsourcing costs included album, MV concert production, content production outsourcing, and branding-related outsourcing. Fees include Weverse payment gateway fees and distribution fees for digital music, etc. Moving on to page number 10. Operating margin is on a downward trend, but operating profit remains solid in size. Consolidated average operating margin fell 4.3 percentage points from 16% in 2020 to 2022 to 11.7% in 2022 to 2024. Drivers include higher outsourced production costs from larger scale, higher quality albums and concerts, and higher fees in line with top-line growth. Amortization of intangibles such as exclusive contracts from label acquisitions increased. Initial costs for newly consolidated labels and newly debuting artists also weigh on margins. SG&A burdens such as personnel expenses for new business expansions, including the platform, further constrained profitability. In particular, 2024 saw a drop in operating margin and operating profit due to the absence of major BTS activities and costs tied to new artist debuts. Album and music video production costs increased with multiple new debuts in 2024, and concert production costs rose with bigger tours, lifting outsourcing costs. Fees also rose with the tech segment's new game launch. Marketing and payment fees, further pressuring profitability. Except for 2024, operating profit has generally continued to grow. In absolute terms, profitability is still judged to be strong. In the first half of 2025, operating margin and operating profit still reflected BTS' continued hiatus, but showed slight improvement versus the prior year period. Net profit carries high volatility from equity method and related items. Ongoing goodwill impairment centered on subsidiary Ithaca Holdings. Due to weak performance at Ithaca Holdings, a wholly owned subsidiary of Hive America, itself wholly owned by the company, which was acquired for about 1.1 trillion won in 2021, goodwill impairments have continued. Yeah, that's a sky-high valuation that, what's his name? Scooter Brown demanded, and at the time, Chairman Pang, HYBE BOY, Pang Xiao, accepted the deal, right? And it is true that business terms, it is not really providing returns, but there are some, invisible outcomes and effects that Hive is enjoying, which is, like the networks in the US, business networks and like artist music networks, thanks to the acquisition of Ithaca Holdings. But I think, whether this deal, 1.1 trillion Korean won deal, is successful is something that we still have to witness over the long term. I think so far it's okay. But yeah. I don't know how other shareholders think, but for me personally, yeah, I think that was a good acquisition, but still 1.1 trillion Korean won is still expensive, but yeah, we'll have to see. All right, recognized impairment losses on goodwill and other intangibles, 83.4 billion Korean won in 2022, 95.6 billion in 2023, 89.7 billion in 2024. As of end of 2024, goodwill related to Ithaca stood at 865.3 billion Korean won. Further impairments will be monitored. Large disposal valuation gains and losses related to equity investments occur frequently. 2023 gain on disposal of investments in associates, 146.7 billion Korean won. Fair value gains and losses on financial assets. For 2023, it was negative 47.3 billion Korean won. 2024, it was negative 43.6 billion. And first half of 2025, it was plus 76.7 billion, etc. High volatility in working capital, but free cash flow remains positive. By industry nature, working capital swings widely depending on event timing, like album releases, concerts, as the timing of sales and purchases shifts. Inventories and trade payables consist of purchase for albums, MD, publications, etc. Both have trended up with the larger artist lineup and expansion of the MD businesses. Changes in other working capital items, such as contract liabilities from the Weverse platform, have a large impact on overall working capital. In 2022, other current liabilities rose by 95.4 billion Korean won, driven by higher Weverse payment volumes and resulting contract liabilities. For B2C items like albums and MD, cash receipts are first recognized as contract liabilities at payment. Interesting. Revenue is recognized upon delivery. In 2023, contract liabilities increased by another 55.6 billion Korean won as Weverse payment volumes kept rising. In 2024, other current liabilities fell by 37.9 billion Korean won due to lower Weverse payments stemming from the BTS hiatus and a decline in advertisement-related contract liabilities. Capital expenditures relate to HQ facilities, headquarter facilities, and stage equipment and are modest relative to internally generated operating cash flow. Free cash flow has consistently remained positive. Although overall operating cash flow declined year over year in 2024 due to weaker profitability during the BTS hiatus, and despite higher working capital needs and dividend payouts, consolidated FCF remained positive, albeit down from the prior year. The company plans to maintain a steady dividend policy going forward, but due to high volatility in net income, it intends to keep dividend size at the current level over the near term. Yeah, that makes sense. By the way, this chart shows the... What is it? Oh, never mind. Let's see. That was page number 11. Page number 12. Equity investment burden inherent in business expansion through label acquisitions and new ventures. Since its IPO, Hive has consistently pursued investments to expand its business base. Equity investments have been actively made to expand music labels and overseas operations, including Pleiades, KOZ, Adore, Ithaca Holdings, and QC Holdings. In the platform and tech-based future growth segments, Hive has also invested to strengthen business capabilities and launch new services, such as Weaver's Company, Supertone, and Hive IM, now Dream Age. However, funding for these investments has largely come from IPO proceeds, rights offerings, and internally generated operating cash flow, allowing Hive to maintain a net cash position and limiting the impact on borrowing needs. In other words, since it's got tons of cash in hand, it didn't need to, borrow too heavy in order to acquire other companies or other labels. October 2020 raised 962.5 billion Korean won through a direct Kospi listing. 2021 rights offering of 445.6 billion Korean won to finance the acquisition of Ithaca Holdings. 2023 rights offering of 50 billion Korean won targeted at QC Holdings CEO and major shareholders. Maintaining strong financial stability with an effectively debt-free structure. Thanks to large cash inflows from the IPO and rights offerings, as well as internally generated free cash flow, Hive has maintained an effectively debt-free structure on a consolidated basis. The sale of its SM Entertainment stake further boosted its net cash position as of June 2025. During the 2023 acquisition battle for SM Entertainment with Kakao, Hive purchased a significant stake in SM. But after withdrawing from the bid, it proceeded to sell its holdings. Yep, that happened. 2023 purchased a 15.8% stake in SM Entertainment from former executive producer Lee Soo-man for 422.8 billion Korean won. After partial sales following the end of acquisition battle, Hive held 8.8% at year-end. 2024 acquired Lee Soo-man's remaining 3.6% stake for 104.2 billion Korean won. After partial sales, Hive held 9.4% at year-end. May 2025 sold the entire 9.4% stake for 243.3 billion Korean won, significantly increasing net cash at end of June 2025 compared to end of 2024. Yeah, even though I think they made little profits, there's also an opportunity cost. So, I don't know. From my perspective, there was nothing significantly good about acquiring those SM stakes from Lee Soo-man. So, the ultimate winner was Lee Soo-man, who made tons of money by selling his shares. Although I'm pretty sure he didn't want it to be kicked out of his own company that he founded. But anyways, as of June 2025, Hive's key financial stability indicators remained very strong, with a debt ratio of 61.0% and a borrowing dependence ratio of 22%. Okay. All right. Outlook. And let me tell you, outlook is something that investors most care about. Profitability expected to improve with the return of flagship artist, and that is BTS. With all BTS members completing their military service in June 2025, the group is scheduled to release a new album and begin a world tour in the first half of 2026. This will mark the full resumption of BTS activities and is expected to drive significant revenue growth and profitability in the music segment. The platform segment is also projected to narrow losses as BTS return boost Weverse monthly active users and average revenue per paying user. Newly debuted artists will continue to contribute to growth. Groups like To Us and Islet have shown strong results, and in August 2025, Big Hit Music launched its first new boy group in 6 years, Cortez, further strengthening the artist portfolio. With the debut of multinational girl group Cat's Eye in June 2024, Hive also began an active push into global markets. However, the success of diversification into new regions such as Latin America remains to be monitored. Initiatives include a boy group reality program, Santos Bravos in Mexico, launched in August 2005. Stable cash generation, but investment policy impact must be monitored. That's underlined right here. Although content, and here's some interesting part. You ready? Although content production costs and expenses related to new artist launches remain a burden, the expansion of scale will ease fixed cost pressures and support profitability. Hive has been paying annual dividends since 2004, and given relatively low working capital needs and recurring investment levels compared to operating cash flow, free cash flow is expected to remain stable. However, additional equity investments and their scale will need monitoring. Hive is expected to maintain investment incentives to diversify its artist portfolio, expand overseas operations, and create additional revenue streams by monetizing artist IP, such as games. That said, the recent sale of SM Entertainment shares provided a large cash inflow, and compared to the past, the company has adopted a more conservative investment stance, limiting the risk of sudden financial strain. Oh, this is the interesting part. Monitoring of disputes with certain artists. And by that, they are referring to none other than NewJeans. Ongoing disputes with some artists, including NewJeans, will need close monitoring. In April 2024, management conflicts surfaced around Adore's then CEO Minijin, a Hive subsidiary. Adore's request for an injunction to block NewJeans members from signing advertising contracts was granted, and the conflict between both sides continues. Although the financial impact is expected to be limited given NewJeans' overall contribution, Hive's ability to manage artists within its multi-label system will remain under review. Although I personally believe that NewJeans is a super exception because Minnie Jin, she's so one of a kind in terms of a character and human being, and I don't think it represents any inherent flaws within Hive's multi-label system. Although the critics and Hive antis and Minnie Jin herself wanted it to look like that. This shows something inherently wrong and flawed about Hive's multi-label system, but I disagree. Anyways, let's continue. Let's see. Oh, here's something else. Monitoring of investigations involving major shareholders and executives. In July 2005, Korea Securities and Futures Commission referred former chairman Bang Seok. Former chairman Bang Seok? Bang Seok 전 의장. 전 의장? HYBE Bang Seok. Why did it say former chairman? Interesting. Is that a mistake? Or okay, well, yeah, it is saying 전 의장. Referred former chairman Bang Seok and several current and former executives to prosecutors for alleged fraudulent trading under the Capital Markets Act, prompting an investigation by the Seoul Metropolitan Police's Financial Crimes Division. Yeah, I'm not sure why they use the wording 전 의장, former chairman. Do they know something that we do not know? We'll have to see. But there was no announcement that he stepped down from the chairman position. All right, moving on. But it's notable that they refer to this case in their report. At the same time, the Seoul Regional Tax Office launched a special tax audit into Hive. Given the entertainment industry's heavy reliance on public trust and reputation, the outcome of these investigations into Hive's largest shareholder could indirectly affect artist activities. Hive's business and financial stability will therefore continue to be closely monitored in light of these developments. Group factors. Hive is a central entity of its corporate group and the practical support provider, but no extraordinary support assumption is factored into the rating. As of June 2025, Hive had 83 subsidiaries and 21 affiliates. It sits at the top of the group's governance structure, overseeing labels, platform businesses, and new ventures, and plays a critical role in overall business and investment strategy. Hive's influence on group branding and recognition is absolute. Despite being the group's main support entity, no assumption of extraordinary group support is reflected in the rating. Some affiliated companies in the platform/tech and overseas businesses continue to show weak results, so potential support burdens will be monitored. Yeah, it is true that Hive has a lot of subsidiaries and affiliates under its wings. We'll have to see the progress that these companies that make. All right, page number 16. We're almost nearing the end. Liquidity analysis. Strong liquidity position. Hive has a well-dispersed debt maturity profile. As of June 2025, short-term borrowings accounted for only 3% of total debt, all of which were lease liabilities. Long-term borrowings consist entirely of bank loans for facilities and operating funds. Outstanding convertible bonds can be put back by holders starting in October 2027 in 6-month intervals thereafter. Okay. As of June 2025, Hive held 1.59 trillion Korean won in cash and equivalents, and internally generated operating cash flow is more than sufficient to cover short-term debt repayments. Hive also benefits from strong external credit standing and capital market access as a listed company, ensuring alternative funding capacity and reinforcing a strong liquidity profile. Business factors. Industry. Oh, okay. So there we go. That's the end of the report. But last but not least, I want to look at this chart. So they are dividing categories, and like for example, overall they provided A+ rating for Hive as a whole, right? But they also explain what kinds of ratings that they have provided for each category, such as industry attractiveness. It was rated around BBB. 산업 매력도. What does it mean? They believe that Kpop industry or entertainment industry is not that attractive. It's like lower end of the categories. I guess in contrast, industries as like semiconductors, AI, that might be more attractive from their perspective. So it's got the lowest rating among the other categories. You know what I'm saying? Now, diversification, rated A rating. Competitive position and market share, rated between AA and A. And company scale, A rating. Company scale is AA. Competitive position and market share, that's A. Company scale is AA. And fixed customer base, A. Service management capabilities, A rating. So yeah, this shows that Hive has a very strong competitive position, solid scale, and diversified operations, though its industry itself is, considered moderately attractive, hence BBB level. Financial factors. Let's see. EBITDA margin, A rating. Net debt / EBITDA, AAA, very strong. And EBITDA / interest expense, AA. And then debt ratio, AA. Dependence on borrowings, AA. So yeah, this indicates very strong financial health, especially with extremely low leverage. And composite rating, model grade, is the model drive grade is positioned around AA. So supported mainly by excellent financial factors and strong competitive position. Okay. So, what do you think? I feel like, overall, HYBE is doing well. Now, the question that shareholders is wrestling with is, when will the stock rise significantly? So the expectation is that once Hive or Big Hit announces BTS comeback officially through dates for the album release and concert dates, the stock will skyrocket. I think that's the expectation, and everybody's kind of expecting that. So yeah, it's kind of, we are right now at an interesting time, and I think that might affect other K-pop companies' stocks prices as well. And as a investment, Hive is really interesting because they are making tons of money, but at the same time they are also spending a lot. And past couple years, a lot of companies around the world have been working hard to save money, like reducing the workforce and try to make the whole process as efficient as possible. But I think for entertainment and K-pop, that's not necessarily easy because visibility matters in this industry. What is being shown is important. So they cannot necessarily reduce spending on the factors they've been spending. Like, for example, do you really want the companies to spend less on, I don't know, like the qualities of music video, qualities of like work? I don't know. That's an interesting question. Technically, I think you can, and I feel like there could be some startups in the K-pop industry who could try like a really lean model and still make tons of money. I think that's really possible, but at the level that Hive is at, that's not necessarily easy. So I think they will continue to spend, and which is why the margin is not that high for this industry. Like compared to, I don't know, AI companies or SaaS companies, software companies, the margin is not necessarily high. But doesn't mean that the stock will not rise significantly. No, it's all about sentiment. So all eyes are on the BTS comeback schedule and how the market will respond to that. But what this report basically tells us is that financially, though, Hive is doing just fine, and is in fact is quite stable and strong. Specifically when it comes to their ability to repay debts and their ability to raise capital in the future if needed. So yeah, I think that's the main takeaway, and I felt like it will be worth it. Looking at this whole report is worth it because 한국기업평가, Korea Ratings, is a notable agency, doing evaluations of all kinds of companies in Korea. And as we have just seen, this report is very comprehensive, even compared to the analyst reports, analyzing Hive. So yeah, I think it was quite good. I hope this was informative for you. And as always, let me leave you with some questions before wrapping up. So what do you think Hive's new A+ rating, credit rating, signals about the future of the K-pop industry as a whole? And how much do you believe BTS return in 2026 will impact Hive's financial performance? And do you think Hive's multi-label system gives them a stronger foundation than the traditional big three, SM, YG, HYBE, or does it bring new risk in terms of management complexity? And with Hive holding over how much, like 1.6 trillion Korean won in cash, how should the company best use that money? Like more acquisitions, global expansion, or investing in technology like AI and gaming? And how important is a credit rating like this for an entertainment company compared to like fan loyalty and artist performance, do you think? Now, also, given the ongoing disputes like NewJeans and regulatory investigations around Chairman Pang, how much do you think reputation risk affects Hive's long-term stability? And last but not least, I know international people are unlikely to invest in Hive shares unless they personally contact their agencies that allow you to invest in foreign companies. I personally have looked into it, but couldn't find any ways for you guys. But if you were an investor, would Hive's financial strength make you more confident about buying its stock, or would you still be cautious because of the volatility inherent within the entertainment industry? Okay, if you have watched up till now, you are a special one. So thanks for staying with me. I'm glad you stayed with me, and feel free to discuss these matters in the comment section. And when you write comments, as always, let's stay positive, respectful, and classy. See you guys later. Peace and love. Bye bye.